We are professional to provide the best service of bank instruments around Asia-Pacific region. Please kindly take a few minutes to listen us as following information about bank instruments services detail from our operation. Bank instruments services. LC. Letter of credit is a contractual commitment by the foreign buyer's bank to pay once the exporter ships the goods and presents the required documentation to the exporter's bank as proof. As a trade finance tool, letters of credit are designed to protect both exporters and importers. BG. Bank guarantee is a type of financial backstop offered by a lending institution. The bank guarantee means that the lender will ensure that the liabilities of a debtor will be met. In other words, if the debtor fails to settle a debt, the bank will cover it. SBLC. Standby letter of credit is a legal document where a bank guarantees the payment of a specific amount of money to a seller if the buyer defaults on the agreement. An SBLC acts as a safety net for the payment of a shipment of physical goods or completed service to the seller, in the event something unforeseen prevents the buyer from making the scheduled payments to the seller. In such a case, the SBLC ensures the required payments are made to the seller after fulfillment of the required obligations. MTN. Medium-term note is a note that usually matures in 5 to 10 years. A corporate MTN can be continuously offered by a company to investors through a dealer, with investors being able to choose from differing maturities, ranging from 9 months to 30 years. Though most MTNs range in maturity from 1 to 10 years. CMO. Collateralized mortgage obligation is a type of complex debt security that repackages and directs the payments of principal and interest from a collateral pool to different types and maturities of securities, thereby meeting investor needs. CD. Certificate of deposit is a savings product that earns interest on a lump sum for a fixed period of time. CDS differ from savings accounts because the money must remain untouched for the entirety of their term, or risk penalty fees, or lost interest. CDS usually have higher interest rates than savings accounts as an incentive for lost liquidity. GCD. Gold certificate of deposit reaches your savings goals with a gold share certificate. A share certificate is like a certificate of deposit, CD, offered at banks. How does a gold CD work? Basically, it's your account where you promise to leave the money with Credit Union 1 for a certain period, and we promise to pay you a higher dividend than a Shamrock savings account during that time. SKR. Safekeeping receipt is where an asset owner elects to place that asset in the care of an agent, usually a bank or a financial institution, and receives an acknowledgement from the caretaker, a fiduciary, as to their safekeeping of that asset. The asset owner may elect to have such an acknowledgement sent to a third party. A fee may be required for these services. BBLC. Back-to-back letter of credit involves 2 letters of credit to secure financing for a single transaction. These are usually used in a transaction involving an intermediary between the buyer and seller. Back-to-back letters of credit are used primarily in international transactions. BB. Bid bond provides a guarantee that a winning bidder will take up the contract as per the terms at which they bid. A bid bond ensures compensation to the bond owner if the bidder fails to begin a project. Bid bonds are often used in construction jobs or other projects that follow a similar bid-based selection process. IF. Invoice financing is an accounting method that lets businesses borrow against their accounts receivable to generate cash quickly. With invoice financing, a company uses an invoice or invoices as collateral to get a loan from a financing company. BD. Bank draft is a negotiable instrument where payment is guaranteed by the issuing bank. Banks verify and withdraw funds from the requester's account and deposit them into an internal account to cover the amount of the draft. A seller may require a bank draft when they have no relationship with the buyer. Banknotes monetizer. In banking, the term refers to the process of converting or establishing something into legal tender. While it usually refers to the coining of currency or the printing of banknotes by central banks, it may also take the form of a promissory currency. We are professional to provide our services consulting around Asia-Pacific region. Please contact us today if you need more information from our operation. Email liondara.7@gmail.com, www.liondara.com, www.liondaragroup.com.